May profits be upon you. Welcome to another weekly Forex forecast. We're taking a look at the pound USD. You know why I'm looking at pound futures, of course, because when you trade the pound on the spot, you are trading against the USD. So you are essentially looking at pound USD. Same thing with Euro futures and Euro USD. All right. So if you haven't seen my prior videos for the breakdowns of the US dollar index and the Euro USD, I put them out a little earlier today, so just make sure you check those out first. All right, check them out first. You'll see a link at the bottom of this video, uh, underneath this video. Okay, so we're looking at the pound. All right, again on the monthly time frame. All right, first thing I want to check out is the economic calendar. The only thing we have for the pound is on Wednesday. Then that would have the governor uh, Bailey of the Bank of England speaking, and he'll probably be talking about interest rates and all. All right, but that's the only thing I have, and that happens at 4 a.m. On Wednesday. These are the times are in EST times. Okay, so but what you want to pay attention to is the U.S. dollar news, and there's plenty of it this week, and you can see the big one, NFP, is on Friday, all right, early in the morning, EST time, 8:30. All right, and the pound is going to be going up against the US dollar. And if you look at the US dollar breakdown that I gave earlier today, you'll see that I'm expecting some uh, uh, short term bullishness in the US dollar. So let's see what we're expecting with the pound. Okay. Let's get rid of that. All right. You can see on the monthly chart that pound has been pounded. All right. Sorry. You see that it has accumulated here. All right. All right. Above the high of this range, it manipulated and then it distributed. All right. Distributed. Okay. Distributed. All right. So you can see it's been making lower lows, lower highs, lower lows, lower highs. What do we got here? Are we at a lower high, or is price heading up to those highs? What do we got? All right. Right now, this high, sorry, until this high is taken, we are still bearish. All right. The bearish break of structure with a close below it, of course. The bearish break of structure here is, uh, you know, telling me that, structurally we're looking at a bearish trend. All right. Even though you see that we've enjoyed a couple of years, several months of bullishness, we have not taken out that high yet. We've confirmed the bearish trend once we broke structure to the downside. When we have a break of structure to the upside, that's when we'll turn, in a macro view, we'll switch our bias from bearish to bullish. All right. So, but you have to give allowances for pullbacks, the retracements, because that's what makes a trend. A lower low, a low, a high, a lower low, a lower high. All right, relative to this. All right, we have lower lows, lower highs, lower lows, lower highs. Right now, we look like we are in a lower high, and the only way that gets confirmed is if we make a lower low. That's when you confirm that is a lower low, a lower high, excuse me. All right. Now, we also have this nice, bear flag. If I, for people who like to look at trading patterns, we have a nice bear flag. It looks like, we should be heading towards the low of the swing low. All right. And we have, if we take a closer look, you see that we have had two solid bearish months, but the latter, the second half of last month, the buyers stepped in and brought price back up. What is that telling us? We have some momentum to the upside. Yeah. All right. And will that continue into December? Well, let's take a closer look. All right. If we go to the weekly, this becomes a little easier, a little clearer to break down, because what price did was 3 weeks ago we had a very big displacement and expansion, if you will, and then we closed even further behind that. All right. So when price fails to take out that low, you always look at the high of the same candle as being vulnerable, because if it doesn't take the low, it's probably going to come for the high. All right. And price did come for that high into the bearish fair value gap. This is an imbalance. Price came back to rebalance that which is imbalance. All right. So when price is in these things, like a bearish fair value gap, you start to think, okay, well, there's a good chance that this one holds and price will continue back down. All right. But let's be real. Let's put a sharp eye on this. People are going to look at this as a breaker, right? Because price broke higher, it pulled back and broke higher. You take the lowest candle, right? And some people will take the whole group of low candles, which is what I do, to form the breakup. And then price pushes up and then back down and then we're back up. All right. The point of this is that there is this this breaker, this failed, which is essentially a failed order block. This failed order block was retested here, and it's going through here, all right, along with that bearish fair value gap. That gives us a confluence. It gives us overlapping arrays or overlapping, you know, confluences, all right, which strengthen the argument that this level, this as a sell zone will likely hold price, and that it won't start this big, uh it won't just pull through it. All right. But let's take a closer look on the daily. All right. I'm gonna show you something. All right, let's move this out of the way. You know it's there already. All right. You see how price came down here, made that low, pull back, made the lower low, and then made the higher high. That's what I look for in uh, the start of retracements or reversals. That's what I look for. All right. That pattern. All right. This, for me, is an opposing uh, breaker. And I'll have it from here to here. All right. This. All right. Now, actually, the way I would mark it is the up close candles, right? The highest up close candles. But see, it's inside of this swing point here. All right, that's why I'm including that in there. This is subjective. All right, this is subjective here. All right, there's a swing point here, a swing point there. That's why I'm using those swing points. All right, normally the opposing candles are the ones that I want to see. All right, I want to capture those, the highest close on one, and then the this will be the leg that took that liquidity. All right, and then we see price trading through it. The fact that it closed above that high, we can move this now. All right, I don't want to get caught up and confused with my explanations. This is the way I interpret price. All right. Uh, uh, because it closed above indicates uh, more upward, uh, more bullishness to come. And it also created a bullish fair value gap under here on the daily. Now, this is a weekly fair value gap. I expect price to pull back from this. I expect price to react to this uh, uh, powerful weekly, higher time frame weekly fair value gap. But I think that it'll have a limit. I don't think it'll be short term. It'll land on the bullish fair value gap here and quite possibly go higher to test these lows. All right. To test this area here. All right. And then then what are we talking about at that point? I'm looking for fair value gaps to develop that would probably stair step and move us higher. What am I saying in the big picture? Let's pan out. Come on, come on, come on. Thank you. Let's pan out. And what am I talking about here? What am I talking about here? I'm talking about this as a range. Sorry, this as a range of price, and this being the equilibrium, the 50%. I'm thinking that this is discount, this is premium. You want to take your longs from discount, you want to take your shorts from premium prices as a range. I think we're going back to premium. I think we're going to test these lows. I think because we have the equilibrium at this area, I think there's a good chance we bite through this uh, the fair value gap in the near future, because I think that the U.S. dollar is going to be show some resilience before it falls. All right, this week we're going to see some short-term bullishness, but I think the U.S. dollar is going to fall, and I think the pound will benefit from that. We'll have a bit of weakness, like I said. It'll go into that bullish fair value gap here, and then I think it'll start working its way up. That is my forecast for the pound. All right. So I'm going to mark this bullish fair value gap here. Come on, man. Why do y'all do this in front of company? All right. I'm going to mark that bullish fair value gap here. All right. And we're going to see how things go. Prices coming up in there. There's a daily fair value gap nested within this bearish weekly fair value gap here. So we have some areas to watch, some POIs. All right. Some places of interest to watch. I want to see the reaction to this weekly. We can come up to the what do you call the midpoint or the consummate encroachment, and pull back and then up from this weekly fair value gap. We're going to see how it plays out. All right, we're going to let the price action tell us what we're going to do, what is happening, so that we can, make our moves off of that. Let price action dictate our actions. All right. Being predictive is one thing. Being reactive is where you are able to sustain some consistent profitability. All right. But I gave you some areas to watch. I hope you enjoyed the video. Make sure you hit the like button. Boost this if you like the video and want to see more of it. And make sure you subscribe to my channel so that you can catch my updates. I'm always updating throughout the week. Just go to my channel and you'll see on the prior videos. There's a plenty of updates in the comment section and notes under the video. Okay, I will see you in the next video. Thank you for watching.